Hi, welcome to the Market Alert for Thursday, the 1st of July 2021. So stocks and bonds soar in stagflationary Q2. Doom gloom crushes crypto. That's the headline. We know that the market was also pounded to the downside before moving back up as well from midday. News today, Lagarde is speaking at 8 a.m. and then we've got, so that's just as the DAX opens, which is a pain. We'll see though. 8:55 German final manufacturing. 9 Bailey is speaking. We've got manufacturing again from the UK. Bailey speaking again at 10. There's an all-day OPEC meeting and unemployment claims, the weekly one, at 1:30, and then 3 p.m. we've got the manufacturing PMI. And tomorrow, of course, we've got the non-farm payroll, so we'll see what the market reaction is to that today, as well as all of the two central bankers speaking, Lagarde and Bailey. So let's start off with the Dow. The market moved lower, recovered yesterday. Plunge protection team out in force. The market heading back towards the 89% retracement from this high to this low. That's as much as I need to show you on this chart. If we look in a smaller time frame, go back to the 5 minutes for yesterday. You'll see that the market, earlier in the session, the market moved lower. This was out of the blue. I don't know whether they seized the opportunity of the UK GDP figures or what, but the market dropped sharply, 150 points or just over, and then it was soon recovered when the Dow opened and the market moving to the upside. And the DAX didn't quite follow. It became disconnected during the afternoon session, but the market quiet overnight there. You see really quiet, sitting in a sideways range there. Meanwhile, in the DAX, for a quick review of yesterday and what to expect today, the market moved sharply lower, closing below the 20-bar moving average yesterday, but trying to find some support with the Dow on the overnight. Notice also we have a defined range here as well. Apart from the odd spike to the upside, we've got a sideways range in progress here. The market needs to break out to the upside here. We stopped at the 89% on Tuesday, and that was drawn in from, if I recall, that will be drawn in from there to there. I'm going to redraw this, just trying to see where that actually is drawn from. Oh, I see. Yeah, I've got it. It's from there to there and then projected back. And then this 89 here, this is the important one, is drawn from this high to this low. So we've just used a smaller swing there. So yeah, the market stopped at the 89, but this is the one to watch from, as I say, from this one to this one where it stopped at 62. Yesterday it stopped at 89 as well, from there back to there. So you can see there's some support there at that level, and I'd go into detail about this in the second part when we look at yesterday's trading session in depth. Overnight, much the same picture really as the Dow. The market moving up a bit there above the DP level. I got some resistance at the 15,600 and sort of trapped between that at the moment and the 200 MA DP level there. Again, we'll see what the futures does, but if we move to a bigger time frame just to have a look, see where all of the pivot points are and pertinent areas. Let me just move these down slightly just so they're not as, there we go, so that's just a bit clearer. So that's yesterday's session. You can see that the market moved lower and then they brought it back. Didn't quite come back with the Dow. But overnight price is sideways, sitting at that DP level. You've got the high up here, and we're also looking for, oh, there we go, there's the yesterday's low. So I mean, obviously if you're at the DP, you're midway between both of these points. So yeah, a bit of equilibrium there overnight. Price is just in a sideways move. Meanwhile, in the metals land, let's have a look here. We've got gold starting to move up a bit after being hammered down on Monday Tuesday, Wednesday, prices recovering, and then overnight back above the 89% retracement from here up to here. Silver, similar picture as well, stopping at 89 on the downside, which was drawn in from there back to there. My order didn't get picked up at 25.45. The market never came back to that level, so I'll look at another way of adding to the position on a pullback down, hopefully, and then to the upside. But we've been sideways for a good week now and a half. Need to break out to the upside, and if we do, then on the upside we have the potential from this first point here down to here. We'll just draw that in. On the upside, there's a 62% retracement to 78 and 89. Will be a 38 and 50 in between as well, which I'll just draw in. Won't take a second. I thought they were selected, but obviously not. So just click apply and just save that for future reference. So again, back to here and down to here. That gives you the first sort of two areas of where you could expect some problems, and that's going to be at $27 area there, where if prices move higher, that's where it's going to meet some resistance to begin with. Delivery all out of the way now. The July contract off the board. So we'll just wait and see if the prices can move. Of course, we're still interesting enough on a smaller scale. If we go from here down to here and project back as well, you'll find that we have got some resistance at 89, which is where we're just trading at now as well. So just remove these for you. We need to drive through that area there on the upside. If we look at that in a bit more detail, if we drop down to a 30-minute chart, you'll see what's going on there. Overnight, prices have been moved to the upside, and we need to take out this high here as well. And in fact, even in a smaller scale, you'll need to take out that 89 as well, where the market's just trading at the moment. Meanwhile, the dollar, interestingly enough, is moving up with the metals. The sort of relationship which is normally inverse, is related this morning. They're both moving in the same direction. So interesting. Hopefully, they'll continue to do so as well. Also, the dollar will reverse and move to the downside, and then silver will be free to break through all of the resistance areas that we have at these levels. Okay, that's it for a quick review. Move on to part two now and have a look at yesterday's trading session. Okay, let's have a look at yesterday's trading session, and you can see we already had some weakness in the market with prices trading down to the DP once the futures had opened, and also we had the release of the UK GDP figures, which you can see there. They came out worse than forecast. This already set a weakness precedent in the background for the markets in the morning. The spending was down 9.9 billion and 1.6 off the GDP figure as well. So as the morning started to open, we see the market trading down to the DP level, and then just as we had yesterday, on Tuesday, we saw the market open and move sharply to the upside, just as we did here. However, there was no follow through here. We can see there we've got the weakness across to here. Previous day's close there. So prices trading through this, but then making no headway. We see the selling coming into the market. Prices closing back below the 200 MA, which is the black line there, on increased volume. So we know there's some selling around. They try to buy back the market, but it fails. The selling comes back in again. Get a bit of buying pressure coming in as we head back down towards the DP level there. So as we fast forward, you can see prices trading down to the DP level. I'm going to look in the daily chart just to see where we are. We've got all of this here to the downside, drawn from here to here, projected back. So these were all of the target areas to the downside. And prices finding support there, coming off the DP, and we get a signal. Now the problem here is the market just failed to follow through. Like I say, the precedent had already been set with the far worse GDP figures than were already forecast. And on this one, I decided to exit the trade and take the 10 point because it was just going absolutely nowhere. If the market doesn't go off immediately, it's rare that it will go. So I just decided to pull this one, as you can see there. And then prices started to move to the downside and break down. And at this point, I decided to go short. Now, I know there's no signal in the 2-minute chart, but as you'll see as we go further through here, there was one in the 5 minutes, and that was an indication that we'd already got the weakness already, prices coming back, failing, and then moving to the downside. So I traded this down, and I actually got out here, got other things to do. We traded down to the S1, and that was for a total of 70 points from the entry to the getting out of the actual trade. So 70 points. Well, the market continued lower down to the low, which is no surprise really, but then headed through this, which was the surprise. I have to say, normally the market would pick up some support at this level, which it did for a bit, but then continued to break down there. So still trading down. Eventually you'll see the volume coming into the market there, bringing prices back, and then the market finding some sort of support. So prices sideways, and I'm going to fast forward here because the market started to make its way back. You can see we're back at the low now. Something the market will always do is try and come off the low. And just before mid-morning there, you can see around midday, not mid-morning, midday, prices coming off this and low, and then starting to move back to the upside there. So now the market's waiting for the news. This was let me just wind this back because I've actually got this for you. Got all of the news items here. It was the ADP employment gains slowed in June. Service providers continue to do the heavy lifting. So the news wasn't that good, but that didn't really matter. The market trading sideways, coming back, finding support, as you'll see in just a moment, and then again drifting down to the low, which is, again, as I often say in the market alert, in a bull market you want to see prices hold at the low, and that's exactly what they did. Now, I forgot to mention this earlier, but the market traded down to the 89 and also the low to the left here that I think was last Wednesday. Without going back and checking. But we had this down day and then the market reversed and moved back. So Thursday, Friday, Monday, Tuesday. Yep, so it was. So the market coming back just below the 89 and to the support where some buying came in last week. So immediately off the low, similar to what we saw in the morning off the BRN, this time price is driving through, which we didn't get in the morning one. This is what I'm talking about. And then trading up. But unfortunately, I had to get out of the trade because we had further news coming out. So let me just fast forward to this. And this started off with the Chicago PMI. These figures came out and wasn't as good as expected either. But that didn't matter because they just used it to move the market to the upside there, which you can see. And then it was time for more news. So not a lot going on at the moment as far as the trades are concerned because we're sitting waiting for news. This one was there we go, pending homes sales book dismal trend surged in May. I think it went from -6 to +8 or something. Just remember these are May numbers, and mortgage apps have plunged since this. So next month it's not going to be so good. So the downloading of mortgage apps has obviously dried up. So that news was met, again, fairly sanguine reaction to it. Prices trading sideways as we wait for the crude oil inventories. And this coming out far greater than forecast as well. We'll trade pumps and dumps after 6 straight week in weekly crude oil draw. Despite last week's massive draws in crude oil, gasoline inventories, crude oil prices have stayed relatively flat, signaling some skepticism with the breadth of recovery. Well, it was -6 million, so I didn't really see that as a minor, but there you go. So we had another signal just after this. This one took a bit of shoving. We've got this resistance here as well. And I decided on this one that I would move the stop to break even and just see if we got enough to get through this high to the left. But then when I drew on some fibs from this high to this low, 78% pops up here and the market stops at this level. I didn't take the profit and the market came back to break even and stopped me out and then actually drifted lower. So I should have taken the profit, but I was hoping and praying that it would move higher. But of course, you know, trade what you see, not what you think is going to happen, because then the market drifted back to the downside there. Oops, let me just bring that back for you. And continued on down until it traded sideways and then finished off at the 4 p.m. session. Okay, that will do it for today. Let's see what today's trading session brings. But as ever, thanks for watching. See you in the next one.